Hello, everyone. I'm John Thomas, the Mad Hedge Fund Traders. Want to thank the Market Traders Institute for inviting me on today. And thank you, Renee, for doing all the hard work for putting all this together. My webinar today is entitled Sell the News, because that's exactly what we've been doing for the last couple of weeks. Those who didn't suffered for their laziness. First of all, why listen to John Thomas? Well, I do have 50 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, a little brief time out as a Marine combat pilot in Desert Storm, 10 more years running the first international dedicated hedge fund, and 5 years fracking for natural gas in Texas. My last decade has been spent publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry who is still working. This is the other reason to listen to me. 56.09% is how much money we've made for our clients over the last 12 months. And I know many of you have made a lot more than that. We are at an all-time high in performance. We just had one of the best months ever, buying the big dips, selling the big rallies, and playing the volatility trade as well. And if you think I just got lucky over the past year, this is our 8-year performance. We basically make money in all market conditions, catching many of those short-term moves. We're averaging about 35.55% a year. And this is a daily independent audited performance, just like any hedge fund would have. I do tend to get around a lot. This is me at a skeet shooting championship in New Zealand last summer. I didn't tell them I did a few weeks at the sniper training camp at Camp Pendleton in California, won the contest, and was happy to share the bottle of champagne. If you are not up 56.09% in the past 12 months as I am, you are reading the wrong newsletter or following the wrong trade mentoring service. This is my secret weapon, the Mad Hedge Profit Predictor. This is a market timing index driven by 30 different economic, technical, and momentum-driven indicators. And this algorithm backtests every new data point 30 years and can predict the next movement in the market short term with a very high level of success. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy that upgrades itself 30 times a day. Don't go to a gunfight with a knife. If you are trading against algos alone, you will lose. Algorithms provide you with a defined, systematic trading discipline that will mightily enhance your trading profits. And this morning's reading we had at 40. Whenever the market gets below 20, that is an extreme buy indicator. When it gets over 70 or 80, that is an extreme sell indicator. So really kind of approaching the middle sort of the range. The last couple of months worth of trading, we've been between 5 and 45, and that has been your trading range really since the beginning of February, and that is why we're up 20% so far in 2018. If you look back at our suggestions over the last 3 years generated by our algorithm, you can see we get several round trips a year in the market. Whenever we get below the 20 level, that's an extreme buy indicator. Up above 70 or 80, that's an extreme sell. And this thing just makes money like clockwork. You just have to have the guts to follow its advice and execute the trades on your own online trading platform. We have 30 inputs at any given time in the algorithm. Some of them are well known: the VIX, the 250 and 200-day moving average, stock bond performance spread, RSIs, US DDB trends, Case-Shiller National Home Price Index, and so on. And it's a mix of economic and stock market indicators that tells you whether we should be buying or selling at any particular time. Just to give you an example of how the algorithm has performed against the main market. Of course, we've been in a bull market, so making money is like falling off a log, but there's money and then there's real money. Over the last 3 years, the S&P 500 was up 38.77%. During exactly the same time frame, the Mad Hedge Trade Alert performance was 114.13%. That is 2.94 times the S&P 500 index. If you want to learn how to triple the market outcome, just listen on to this webinar. This is a typical chart with the indicators we get. Our algorithm gives buy and sell indicators for all asset classes, including stocks, bonds, commodities, energy, foreign exchange, and real estate, as well as individual stocks. The algorithm caught the buy for financials at the end of November. We caught the year-end rally. We sold the beginning of, we bought it again at the beginning of February for a double weighting, and then we sold out at the end of March. So that was a nice little moneymaker. Over the last year and a half, we caught an 85.71% gain in Goldman Sachs. This is a really amazing chart. The algorithm knew who was going to win the presidential election before we did. We were expecting Clinton to win, like the rest of the investment community. But 8 days before the election, our algorithm is saying buy U.S. steel, which would have been a huge beneficiary of a Trump win. That's exactly what we got. We bought U.S. steel, got a 160% move in the stock, and then we sold out a few months later when the domestic agenda started to stall. We got back in last summer and got another meteoric return on U.S. steel. It was one of our favorite stocks for last year. There is a method to my madness. When markets reached their first upside resistance point in the last rally, I sold almost everything I had and hedged what little I had left by buying S&P 500 puts. I also added a long volatility position to spice up my performance. Banks' earnings 2 weeks ago showed the market's hand. By selling off on good earnings, that set the pattern for every other sector, including technology. And soon that evolved from sell on the earnings to just sell. Too many people were buying stocks in the expectation of great earnings. The reality is that the stock market rally of the last 2 years, where many of the main stocks doubled in value, that was discounting great Q1 earnings and Q1 earnings delivered. Wide trading ranges will continue until the November election, followed by an upside breakout to a new high by year end. Sell every bond rally. The Fed is now engaged in major quantitative tightening, or QT, in the face of exploding deficits. Stand aside on oil, foreign currencies, and commodities, which are all pretty quiet until the multiple crises we're looking at ends. And if you wonder why I'm in such a good mood in that picture, it's because I am doing aerobatics in a P-51 Mustang over Florida. If you don't know what a P-51 Mustang is, that is it. It was the preeminent fighter of World War II. I'm in fact rated on about 50 different vintage aircraft. Flying it is an absolute blast. Did I mention I get around a lot? And this is my retirement, by the way. This is just how I kill my weekends. Stocks, we are in correction time. Stocks failed at the first resistance, confirming the intermediate downtrend still lives. Washington chaos, trade wars, shooting wars are capping any upside moves in stocks. Cheap valuations, spectacular earnings growth are supporting the downside. Some 25% of earnings came from a falling US dollar in 2017. That won't be there in 2018. That could be a concern on quarters going forward. Stocks are setting up for a range for the next 6 months going into the November elections. Only one more week until the seasonal headwind of sell in May and go away kicks in, and this year could be particularly ferocious. Volatility spikes, but the last spike was only half the peak level. It's no way reflecting the massive intraday swings we're seeing in the market, 600, 700, 800 points at a pop. VIX is only calculated on the close. You can be up and down 700 points in a day, and VIX will look at that as a quiet day. This time it's different. All past market tops were defined by interest rate or oil price spikes. Now we're getting both. Oil has just rallied from $25 to $70 a barrel. The 10-year interest rate has gone from 2.03 up to 3.03. So that's a 50% increase in interest rates at the long end in less than a year. So if that continues, you can count on a recession ahead and a bear market in stocks to precede that. Next recession is likely to start in 2020. That means stocks could rally for 12 more months until the game is over. Dow 28,000, here we come. When the end comes, downside will be much more ferocious than in the past, thanks to new technology. February was just a preview. And that's me hanging out in front of the Constitution in the Boston Navy Yard. This is an example of how our algorithms give buy and sell signals. We bought the S&P 500 for the year and rally in November, took profits right at the end of January, bought the February 9th meltdown, went 100% long there, mostly in technology stocks, caught the big pop, got out, and just got back in recently on the early April meltdown. That also proved for us to be immensely profitable. There are 10 reasons why there will be no 2018 crash. U.S. stocks are still one of the highest yielding asset classes in the world. Oil prices are still less than half of where they were 5 years ago. Weak yen and euro are still stimulating Japanese and economic economies to buy our exports. While U.S. interest rates are rising, they are doing so at a snail's pace. Delayed U.S. interest rate hikes will keep the U.S. dollar cheaper for longer. Technology everywhere is hyper accelerating, boosting profits. Record stock buybacks and M&A are shrinking the supply of equities. And by the way, the level of stock buybacks hitting the market now is 51% higher than it was a year ago. And next week, Apple is expected to announce a gigantic increase in their own share buybacks. Could be as much as $100 billion in 2 years. Tax cuts are providing major market support, while Washington chaos is capping market is not bad enough to send it to new lows yet. Trade war is so far all talk and no action. By the way, if you have any questions, just type it on the right on the question box, and I'll get to it later on when there's a break in the webinar. Technology lives after an initial shock. Tech is rebounding strongly. The world's most profitable companies are huge beneficiaries of corporate tax cuts. Technology companies will benefit the most from any cash repatriation plans. With Apple at $270 billion in cash, we get an update on that cash level next week. Could be as high as $300 billion. And as I just mentioned, they could spend $100 billion of that buying back their own stock in the next 2 years. Hyper-accelerating new technologies means that profits will keep growing at 20% a year or more. Tech makes a great hedge in case the domestics roll out slower than expected, which is happening. Big institutions and hedge funds are loading the boat with tech on every dip. Never sell tech for the long term. It always comes back. This is the big overview for the next 6 months, people. We are capped on the upside by Washington chaos, trade wars, rising oil, and rising interest rates. But we have higher earnings growth, good valuations, and buybacks on the bottom. Also, there's nothing else to buy. And at this very low tick level here, right around the 200-day moving average, that works out to a PE multiple of 15, which means the PE multiple for the market is the cheapest it has been in 5 years. If we get down to those levels, that's where I think you see a ton of buying kicking in from institutions, even though interest rates have been going up slowly. Here's some of our successful algorithm calls over the last couple of years. Facebook, we caught the double in that, 103% move. by buying here, here, and here, and we are still long. Apple, one of our long-term favorites, almost a double there, 87.5% profit in 15 months. And eventually, after chopping around here for a while, you can expect Apple to blast through to a new high and print $200 a share. And we could get that next week after the earnings report. Alphabet, another big winner of ours. Again, getting multiple buys on all of these dips. And sometimes in tech, you don't even get dips, you just get sideways moves, and algorithms can catch those also. Amazon, another one of our favorites. They're now starting to do deliveries to cars in the San Francisco Bay Area. They can open your trunk remotely, drop your box in there, and you don't have to worry about it getting stolen unless they steal the whole car, which also happens. VIX, we're a very active trader there, and we made a major long call here going into this super spike. Since then, we've been in a range in the VXX from 38 to 52, and we've been doing multiple round trips on there. You can see we took profits on these option spreads on everyone, doing both bear and bullish trades in the VXX. So this will probably continue for the rest of the year. The VIX seems to be at a new permanently higher level. That is a gift to traders. Let's see, let me check the question box here. And yes, we are getting a ton of questions. Richie is asking, do you do options or only stocks? Richie, with every one of our trade alerts, we include a recommendation for a stock, an ETF, and an option. That way you can pick and choose according to your experience and risk tolerance level. We want to get as many people involved in these trades as we can because they make money about 90% of the time. Let's see, any other questions? Okay. Let's see, just let me read these questions. Which makes the most money, stocks, options, or ETFs? Answer, the stock buyers have made the most money over the last 3 years because they tend to buy and hold. Most option plays are very short term, 1 to 3 months, and you get in and out quickly. Your risk is lower, but you also make less money than the outright stock guys. You may make 10% on a good options trade in a couple of weeks. You hang on to the stock, you make 100%. And that has been the experience with the bulk of our readers. Going forward. Okay. Any tips on hedging Amazon tonight? This seems to be a popular question today, and the hedging strategy for that is to take your significant other out for dinner and just wait until tomorrow's opening. My guess is we'll get a pop similar to what we saw on Facebook, but there's no way of gaming that with any high probability. Okay. Joe is asking, why is the VXX a gift to traders? Answer is lots of volatility within a defined range. That is a license to print money. Micron Technology, we also have another service called the Mad Hedge Technology Letter. They recommended this at the beginning of February. Got a 60% move. We got out at the top. Now we're looking to go back in. This was all caused by one ugly report by UBS, which had never covered the whole industry before. I thought, aha, must be a sell here. They're wrong, and they just gave us a chance to redo this trade all over again. Salesforce, another one of our favorites, again, got caught in the tech meltdown in March. We have done 2 round trips on this so far this year, both on the call side, and we plan to keep doing that, taking advantage of the volatility this year to get in and out of these trades. And like I said, in the meantime, the stock owners who got in at the beginning of the year at close to 100, they were up 30% at one point this year. So people who bought it 3 years ago, they're up more like 400%. Tesla, another great trading vehicle. We're in and out of this thing constantly. We've been buying it ever since the after IPO meltdown at $16.50. We caught the move from $16.50 to $3.92. Stock's difficult to trade from here on as they run up against production problems. However, even though I don't buy the stock anymore, I buy their cars. This is my third Tesla, the Model X High Performance. $149,000, fully tricked out with ludicrous mode, goes 0 to 60 in 2.9 seconds. The only problem with that kind of speed is your passengers tend to get car sick unless they're combat pilots. So we carry air sick bags in the cars just in case that acceleration and those G-forces get to be too much. This is my last Tesla, and no matter how well you design a car, isn't going to hold up against a drunk driver in a pickup truck on Christmas Eve. Yes, this was chassis number 125, one of the first Teslas ever made. It is now in the Tesla junk pile of history. When we took it apart, we found that the lithium-ion battery out here underneath the back seat, 1,100 pounds, that gives you a 300-mile range. In 10 years, that'll be a 100-pound lithium-ion battery, or some other type of battery that gets you the same range. You also have carbon fiber honeycomb on the wheel wells. That makes this the safest car in the world, and it certainly worked on me. I just got out of the car, took a picture of the guy's license plate, and let him drive away because he was drunk. Bonds, we just finally broke through 3%. That's a new 4-year low in prices, high in yields. The next big move in yields is probably down, so avoid all rising rate plates for the time being until you can get another good entry point. Take profits in the TBT. Fed is to raise interest rates by 25 basis points again in June, and we could, in fact, get 3 more hikes by the end of the year. We took profits on all our short bond plays, nothing to do here, but wait for the next bond rally to sell into. Global liquidity is shrinking much faster overseas than it is here in the US, so we may start to see economic problems faster overseas. Also, still looking for 325 to 350 by the end of the year for the 10-year Treasury. Exploding deficits will weigh on bond prices for the next decade. This is one of our favorite traders. We're doing about 2 round trades a month in this thing. We started selling again aggressively in December. Caught this whole move down and, resumed selling here. And now we're completely out, having taken profits on something like 20 to 25 different positions. This is the TBT, the inverse ETF. That's the one you want to be buying when interest rates are rising. And again, very active trader, made a ton of money on this for our customers, but now we're out waiting for another good entry point. Foreign currencies, we finally got a breakdown in the currencies, a breakout in the dollar. We'll see how long it lasts. Rising interest rates always lead to rising US dollars. That will be a major drag on the economy going forward. We're also getting a flight to safety bid that's sending the dollar soaring. Euro and Japanese yen collapsed to low end of recent ranges as hedge funds unwind their short positions. No trade, no volatility when compared to stocks. End of tax season brings $25 billion worth of selling in Bitcoin for people to pay their capital gains taxes. The one-to-one correlation between cryptocurrencies and stocks lasted for a couple of years. It is completely fallen apart now. We had stocks collapsing last week, and Bitcoin's managed a 30% rally. Here's the US dollar basket. You can see why we didn't do any trades, not enough volatility to make a round trip in there. Same with the Japanese yen, although it has broken down recently. Euro, we have been an active seller, selling every rally, covering shorts, and then reselling again. So that has been a moneymaker, but we're not involved all that often because of the lack of volatility. Bitcoin, these are your modern day tulips. However, the trading volume is rising dramatically now. It's at an all-time high, even though you have multiple countries trying to ban it and the SEC trying to force registration. The tax overhang problems are over now, and that got you your big rally. Energy, we got a perfect storm in favor of oil prices. OPEC is extending their production curves to the end of 2018. That will send oil to new 2018 highs in the mid to high 60s. Chinese imports top 9 million barrels a day, will surpass the U.S. as the world's largest importer sometime this year. Iran demonstrations threaten to cut 4 million barrels a day from the global oil market, as are warlike noises coming out of the Trump administration. Extreme cold weather also helps. Terrorist attack in Libya. Only a real sustained trade war that slows economic growth can really hurt the price of oil. And again, I think that's going to be more talk than action by the dips in energy stocks. Here's your breakout on the price of oil. Made it all the way up into 70. Stocks really lagged late in this and only started to move in the last couple of weeks, even though we've had, since the summer, a $20 rise in oil prices. Actually, it's 25 from the low. Here's your energy select ETF, and even though oil was going up, stocks were flatlining, only pulled off the breakout just in the last couple of weeks. Here's another instrument we follow, Master Limited Partnerships, put out a strong buy recommendation down here, and people made money. And these things, by the way, can yield anywhere from 8 to 10%. So as long as oil prices are rising, this will continue to appreciate and pay you 8 to 10% in dividend yields. Precious metals back in the spotlight. Gold is holding in despite a huge risk-off bias in global markets. Get ready for a big jump when Venezuela runs out of gold. And by the most recent calculation, that will happen in May next year. Continued buying by the Russian central bank is putting upward pressure on gold. Hedge funds have started to dip their toes back in the water. Bitcoin is stealing away gold volatility. Wait for buy gold and silver stocks on the next big dip. And that is me in the Istanbul gold market doing some early Christmas shopping. Get your questions in the question box on the right, and I will address them as we approach the asset class in question. We've been a very active gold trader, got the big buy in December, took profits at the beginning of 2018, and then we've been buying each of these little dips down here with short dated call spreads, and they've all been working. Newmont Mining, one of our favorite gold miners, close to a new high here, expect to break out any time. And Barrick Gold is another one. We had a long position in there last summer, made a lot of money, but on our last buy, we got stopped out. We do send out stop losses on positions that we're bailing from to try and limit losses. I tell people I'm too old to start all over again if I lose all my money, so I tend to stop out of losers very quickly. Real estate is cooling. March existing home sales up 1.1%, new home sales up 4%, up 10.3 year on year. We've had 73 consecutive months of price rises, one of the longest runs in history. Most of the buying surge is taking place in the technology-driven West. 30-year fixed mortgages are starting to approach 5%, cooling the entry-level market. New tax bills cutting home mortgage deductions by 50% in 2018. REITs have crashed on rising rates. Case-Shiller nationally is still rising at 6.3. Home Depot has been one of our favorite traders in the home area, and of course we got the tailwind of the hurricanes last year. We're looking to buy the next dip in this. Here's the Case-Shiller taking a run at all-time highs. The big winners are Seattle up 12.7%, Las Vegas 11.6%, and San Francisco 10.1%. So what do we do about all this? Stocks trade the range, bonds sell rallies, commodities stand aside for now, currencies also stand aside. precious metals by the dips, and real estate you want to buy. Here is the long view. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials will become the big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. In the meantime, central banks will bridge the current 2008-2022 demographic slowdown with aggressive monetary policy. What happened the last time we had a major demographic tailwind for the stock market? It went up 20 times in 18 years. Yes, you old guys will remember this. We went from Dow 600 to Dow 12,000. Get ready for a replay. If we get the same action that we did with the last demographic tailwind, we go up 20 more times in 18 years. That takes us up to Dow 120,000 by 2027. If I'm wrong in my forecast, that is a low number because we have multiple technology inputs from many more sources than we did in the last one, which should cause even faster acceleration. In the last bull market that took us up 29 times, technology was only about 5% of the total market. Today, it's 26% of the total market on its way to 50% or more. So who will show you how to play the next 90,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top mentoring trade service in the industry of 56.09% in impossible markets. Follow my research and market-beating trade alerts, and you will rake the profits in. 5609, this can be yours. All you have to do is follow our service. And if anything, we are getting better with our old age. Let a Marine combat pilot steer you to big profits. And no, that is not the plane I flew in Desert Storm. That is a 1932 de Havilland Tiger Moth. Note the design flaws: gas tank right over your head and no brakes. That's why you can only land this plane on a grass field. But wonderful aerobatics, and this used to be the entry-level plane for the Royal Air Force. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical trading month for us. Our trade alerts are successful roughly 90% of the time, and the other 10% we stop out of very quickly. You can see we bought the S&P 500, sold short treasuries, bought the Russell 2000, bought Amazon, bought Apple. We bought Biogen and then came out very quickly thanks to a certain presidential tweet. But we jumped right back into Palo Alto Networks, short the yen, short treasuries, long SPYs, and long gold. If you want this to be your trading record, listen on. This is how it works. We sent out a major report on artificial intelligence in November 2016. Then the stock was at 28.57, and the trade alert looks like this. NVIDIA, buy at 68.57 or best. Portfolio weighting 10% or $10,000. To buy $10,000 worth of stock, you needed to buy 146 shares. What did NVIDIA do? Up 78.5% in 2 months. Of course, it's more than double that. Now, we don't just sit on our hands and pat ourselves on the back. We sent out another alert that says take profits. Sell NVIDIA shares at 120 or best. Closing trade. In this particular trade alert, you made $7,500 in less than 2 months on a $10,000 investment. Most people will take that all day long. With my Global Trading Dispatch service, you get a daily research newsletter giving you the deep background on all the trades and economic trends in play, true hedge fund manager analysis that others pay thousands of dollars for, You get instant trade alerts texted to you at market sweet spots. How sweet are they? They've made many of my subscribers millionaires. Bi-weekly live global strategy webinars like this one with the Mad Hits trading staff. Let our 100 years of combined trading experience pay off for you. And of course, I account for 50 of those years personally. You get invitations to strategy luncheons around the world. You can rub shoulders with some of the savviest money managers on the planets and trade ideas. You get unlimited access to my 9-year database with searchable company names and ticker symbols. I'll even give you the name of a great surfing camp in North Africa with a seniors division. Hint, it's a lot harder than it looks. Here's what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay it because I make them millions of dollars. And I'm not going to charge you $10,000. That's what I charge my concierge clients who get my personal cell phone number so I can act as their investment 911. And I'm not going to charge you $5,000. That's what I charge my advanced options trading clients. And I'm not even going to charge you $3,000. That is the lowest price for 1 year of this service on my website. For not for you, this is the real deal. Creating this product cost me millions of dollars. With the best customer service in the industry, running it cost me millions more. Today, and only through this webinar, you can have 3 months for just $497. We know when it comes time to renew in a year, you'll happily pay the full $3,000. Just click on the chat box on the right to get to the dedicated sales page and take advantage of our offer there. And Renee, if you can post that link in the chat box now, I would appreciate it. And there it is. No, that's not us. That's the previous offer letter. There it goes. It's the link that says madhedgefundtrader.com/MTI. Click on that link and you can get the $497 offer. That is the only place you can get it. You can't get it on our website or anywhere else. This is a limited time offer. We only take 25 new subscribers at a time, so it's first come, first serve. I can't wait to make you a top door trader. Just click on the chat box on the right on the madhedgefundtrader.com/MTI link. Let me make the money for you to pay for your own subscription. You make the trades. Discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. We told you which stocks to buy during the Trump melt-up. Who will tell you what to do during the following meltdown? Just click on the blue hypertext in the chat box on the right. 3 months for just $497. Let me show you how to make the money to pay for your own subscription. And now I'm going to go through some questions. So type your questions in the chat box and I'll get to them as soon as I can. Bill in Portland, Oregon is asking, can we talk to you directly? Bill, I spend part of every day calling readers and looking for ways to improve the service. You can email me anytime you want. I always answer the same day. The reason I do that is we often get great trading ideas from our own followers, such as, why aren't you doing this? Have you heard of this name? NVIDIA when it was at $20. Dan, Topeka, Kansas, what's the minimum amount of money I could start with? Dan, a lot of people start with $10,000, but we have students in dorm rooms trading with as little as $400. That's the minimum cost of our smallest positions. Jim in Dallas, Texas, are the trade alerts for stocks, ETFs, or options? Jim, we send out all of the above with each trade alert. So you can customize it, each one to your own portfolio. Joel in New York City, how often is the newsletter sent out? Joel, we send them out every day the market is open. That's about 250 newsletters a year. It's usually more than most people can read, and we're covering all asset classes at all times. That includes stocks, bonds, commodities, precious metals, real estate, and so on, and well as the general economy. Let's see, let me scroll through these questions here. Mary, Kansas City, Missouri. How many trade alerts do you send out a year? Mary, we do about 200 a year. It depends on the market. In a dead market, we'll go quiet for weeks on end. In an active market, we can do as many as 5 trade alerts in one day. More than that, we start to overwhelm our own customers as well as our own staff, who work really hard to get all these things out in a timely basis. Here's another testimonial, and that's me at Incline Village, Nevada, where I keep another office and where I work about 4 months a year in the winter. I'd go out and do about 10 miles a day of snowshoeing with a backpack just to stay in shape, and I get all my great ideas when I hike uphill. Let's see, let me look at some more questions. Is the strong dollar over? I would say no. Interest rates usually are the main driver of foreign exchange rates. When you have rising interest rates, you have a rising currency. And with rates having gone up now for 9 months and expecting to go up for another 10 years, I would say a strong dollar is a pretty safe bet. The reason it hasn't really moved far yet is because you had the stock market just sucking in moving money from all over the world into all asset classes, and it kind of ignored the dollar trade. That's over now. We are getting a strong dollar. It hit a high for the year yesterday, and that could well continue. Let's see. Moving on. Here's a good one. You obviously have enough money. Why are you doing this? Well, teaching people how to make money and secure their financial future is the love of my life. When I was on Wall Street, I used to see so many people get ripped off by brokers. It used to make me sick. This is my chance to level the playing field for the regular guy and make money for people like you. Robert in Seattle wants to know, when will there be a recession? My bet is late 2019, 2020 at the latest. And it's really easy to calculate. You just track how fast interest rates are rising, how long it will take for short rates to be higher than long rates. That's called an inverted yield curve, and a recession almost always follows 6 months after that inverted yield curve happens. So watch interest rates closely. That is when the next recession will hit, and you don't want to be anywhere near the stock market when that happens. In fact, there are great trades, and that'll be on the short side of the stock market when we're in a bear market. And we made fortunes in 08, 09 playing the downside through SDS, SH, put spreads on the SPYs, and a whole multitude of other short plays on the stock market. Okay, moving on. George in Austin, Texas wants to know, when does your letter come out every day? George, will be in your inbox well before the market opening every day, so you have time to read and act on it. We post at midnight Eastern, and actually we have a couple hundred people who wait up that late just to see the letter come out, so they can get a head start on the next day. So you'll have plenty of opportunities to get the information. Jim in Palo Alto, California, are you an algorithm? No, but I play one on TV. No, really. If I knew a good machine noise, I would make it now. All I can say is come to my lunches and you'll find out. Pinch me, and if I bleed, you'll know I'm human, but you might also get a punch in the nose. So I do have a black belt in karate, so I would not advise that course of action. One more testimonial here, and that's me back in New Zealand with some real live black swans. Notice that I keep my distance because they bite. Yes, they're not very friendly creatures. Let's see, more questions here. Ivan in Portland, Maine. How would you describe your trading philosophy? Well, that's a good question. Like every professional hedge fund manager, I use fundamentals for my long-term call and technicals for my short-term execution. This is what every long-term professional does. Roger in Richmond, Virginia, do you offer training with a subscription? Roger, we offer more training than you could digest in a lifetime. Not only do we have books and video courses on executing trade alerts, managing risk, and so on, every single trade alert we send out has a link to a 20-minute video telling you exactly how to execute this trade alert on your own trading platform. We assume everybody is a basic beginner, and guess what? Even the long-term professionals like getting reminded once in a while on the basics. So here it is, 3 months for just $497. Let me show you how to make the money to pay for your own subscription. Just click on the chat box on the right on the madhedgefundtrader.com hypertext. Okay, let me go through more of these questions. Let's see, we've got a bunch that have come in. Just let me scroll through. Okay. Okay, let me go up here. Home Depot up big today, Justin points out. I say, yeah, this is one of the best run companies in the United States. They even make good coffee. They have plenty of experienced contractors working as customer service people who can answer any question under the sun. I think the housing boom still has years to go. That means the upgrade boom and the home refurbishment boom also has years to go. That is all about Home Depot. And by the way, you might also buy Lowe's as a catch-up stock. They have been lagging Home Depot because of lesser earnings, but they're now starting to play catch-up. Joe says he's impressed. Thank you very much, Joe. I look forward to working with you over the next 3 months. And by the way, 80% of our subscribers renew every year, and very large numbers of them have been with us for 6, 7, or 8 years. So, you know, once people find us, they tend to stick with us forever, and they end up making enough money so they can retire. Are your calls applicable to most 401k restrictions? Answer, yes. Certainly you can buy the stocks in your 401k, Paul. You can buy the ETFs, and you can buy calls. The only thing 401ks don't let you do is sell short calls. That means you can't do call spreads or put spreads. That is common to all 401ks, but all it's doing is restricting you to the higher money-making instrument, which is stocks. Just as asking, you flew in Iraq? No, I flew in Kuwait. Iraq was an Air Force job. I was supporting the Marine Corps on the troop movements over there between Dhahran and Riyadh. I did fly around the Persian Gulf for 10 years when I covered the Persian Gulf for Morgan Stanley. I used to fly to Abu Dhabi, rent a plane, fly it all the way up the Persian Gulf, often landing on golf courses because there were no runways, private golf courses in these giant Saudi estates. At the end of the trip, I'd turn the plane in Kuwait and meet with the U.S. ambassador and the head of the CIA for the area. And of course, the day after Kuwait got invaded, 2 Air Force colonels were on my front door asking, how would you like to serve for your country? And I'd said, just tell me where to go. So off I went, left 3 kids at home at the age of 37 and went off to fight the war. That turned out to be a great experience. Any questions here? How was I there? Yeah, Justin, I was 37, 38. Seems like it was a million years ago. Okay, moving on. Robert is asking, how do you think the market will trade this summer? Robert, we had a pretty active summer last year. That's because the tech melt-up was still going on. The tech melt-up is now on pause. And without tech buying, And without the economy really accelerating as was promised, I think we're in for a pretty dead market. And in fact, I'm booking myself on the Queen Mary to fly to sail from New York to England this summer, just so I can catch up on my research reading. Okay, any more questions here? Let me read through the list. What is your stop loss strategy? Very simple. Whenever we get to a loss that amounts to 2% of the total portfolio, I bail, knowing that 90% of the time the next trade alert we put out will be a winner. It's easy for me to go on to the next trade because I know 90% of the time it'll make money. Also, it's much easier to dig yourself out of a small hole than a big hole. Too many times I've seen individual investors play the double up strategy. Well, it dropped 10%. Well, let's double up. Drops another 10. Let's double up. Drops another 10, and then they run out of money, and then the stock goes up, or they get stopped out, or they get a margin call. So keep your losses small. It's much easier to recover from small losses than big losses. And let me tell you, I learned that the hard way. The strategy you're getting is my 50-year accumulation of trading expertise, all learned through trial and error. Of course, working for Morgan Stanley on the trading desk for 10 years also helped quite a lot. Okay, Renee, how are we doing on time? Are you there?
Yep, and you're the last presenter, so if you have more questions to answer anything, then you can go right ahead, no problem.
Okay, let me scroll through the questions and see what we get. What is your long-term trading record? Joe is asking. I had the slide up there earlier in the presentation, but you can go to my website at madhedgefundtrader.com. You have all of our performance records, a complete history of all the trades we've ever done. It's over more than 1,000 trades at this point. But don't look for a cheaper price. $4.97 is the cheapest price you'll ever get for this for 3 months. We only offer 1-year services on the website. That costs $3,000. So you're more than welcome to pay $3,000. But as part of this presentation, we're happy to offer it to you for $4.97. We know once you'll get a taste, you'll stick with it probably for the rest of your trading life. Okay, here's another one from Bill in Geneva, Switzerland. What do you make of Facebook? I happen to think Facebook is one of the cheapest stocks in the market. We went into this melt up today long. We just took profits on our short-term positions. We may go back to retest the 159 low, but my guess is that the next major move in Facebook is to 200. On a price earnings multiple basis, it is one of the cheapest stocks in the entire stock market and is certainly the cheapest major technology stock around. Here's another one from Joseph in London, England. Joseph wants to know, what is your best single stock play? Joseph, if I had to bet all my money on one stock, which I would never do, but it's a nice idea, I would pick Amazon. I think Amazon is absolutely kicking butt. They're taking over the world, expanding into other markets. The antitrust threats from the government will come to nothing. There really is no basis for antitrust since Amazon doesn't control any market share of more than 4% in any of the markets they're in. They are the overwhelming technology leader when it comes to the cloud and the web, and they are moving into more markets every day. I just wrote a letter today saying never invest in toilet paper companies because Amazon is going into the toilet paper business and they will deliver it to your house for free at a cheaper price if you're an Amazon Prime member. So again, Amazon right here is the one to go with. And today's close, Amazon was at 1,517, up 56 today. So it could be taking that run to new highs now. And my target for Amazon for this year is $2,000. So if you can handle another 30% move in the stock, go for it. Otherwise, just wait for the next dip. Okay, well, that is it for today. Thank you for your many questions. Thank you for attending today. You want to get more of this, just click on the chat box on the right, madhedgefundtrader.com, and I look forward to working with you in the coming year. This is John Thomas signing off for today. Good luck and good trading.